So good morning, everyone. My name is Danny Fitzgerald. I'm the Regional Director for the San Diego and Imperial SBDC network. So we are, of course, funded by the U.S. Small Business Administration and the Governor's Office of Business and Economic Development. This is our regular series of Connecting with Capital, really an opportunity to meet some lenders, kind of learn a bit more about everything that we're particularly doing. So we're excited today have a few panelists on here. We have Andrew from Marble Bridge Funding. We have Joyce from Accessity. We have Pete from LendSpark. We have Roxanne from Banner Bank, and we have Miriam from CDC Small Business Finance. Before we get going too much, though, I do also want to welcome the U.S. Small Business Administration from the San Diego District Office. We have Jamie Pritchett, and because we're coming up on an important deadline, aren't we, Jamie? And so we're going to be able, she's going to talk quickly about the economic injury disaster loan and so everything that's going on with that. And so I'm going to go ahead and share my screen and let her kind of talk about that, and then we'll get into our panels. And again, thank you all for joining, and so we will give it to Jamie. The stage is yours.
Thank you, Danny. Jamie Pritchett, Solorzano, United States Small Business Administration. I also wanted to give a shout out to my colleague, Lucy Montgomery, and hopefully she'll, can you share your screen real quick, Lucy, and say hi to everybody? Okay, well, you got to meet her. Okay, let's go on. We're going to talk about the economic injury disaster loan. And as Danny mentioned, we're coming up with the sunset of the program. So it's closing out. So timeliness is really important as we get to those last final weeks. Okay, so what is an economic injury disaster loan? It's a loan directly from the SBA. It's not a grant, but there is a grant piece to the economic injury disaster loan program, and we'll talk about that real quick at the end. But it is a loan. It needs to be repaid, low interest, fixed rate, long-term loan, and the loan is earmarked directly towards COVID-19 and overcoming the effects of the pandemic by providing working capital to meet operating expenses. So I want to keep this really simple and short, talk about the application process, where you're going to apply, the terms of the loan, some of the differences. For example, if you already have a new application, if you're submitting a new initial application, there's a procedure to follow versus if you've already applied and maybe you're looking to request an increase, or maybe you need some assistance with processing an appeal or reconsideration. So we're just going to quickly run through it. We got 5 minutes. And okay, economic injury disaster loan. So what you're going to do to apply for the loan and anything related to the economic injury disaster loan programs is to go online. So it's an electronic online application on sba.gov. And so all of your materials, all of the application gets processed electronically. I encourage everybody to take a look at our website, sba.gov, and the COVID-19 relief programs if they're interested in applying or even learning more on the program in general. Like I said, this is a brief overview. And we have the link here for the COVID-19 relief program. And so that's what it's going to be. It's going to be an online application. For those first-time initial applications, I would recommend that you get all of your taxes together and all of your business documents and sit down, be ready to effectuate that application in one session. And again, if you need assistance, whether it's with technology, with language, or not comfortable with submitting this application, the Small Business Development Center and the SBA San Diego District Office is available to assist everyone. There's no barriers to applying for this application. So please keep that in mind. Okay, so let's talk about some of the terms. There's 3 buckets here. 3 categories of loan sizes. So interest rate on the loan is 3.75. The awesome thing about this program is it also includes nonprofits, and the interest rate for them is 2.75. As incredible as that interest rate is the repayment period, which is up to 30 years. And also benefit, and another awesome benefit is the deferment period, up to 24 months. Okay, so I mentioned the 3 categories of the loan and sizes of the loan. So category A, 1,000 to 25,000 loan amount. Credit score is 570. And that applies also with the second bucket that you see there on this slide, 25,000 up to $500,000. Again, the credit score is 570. With those, I'm going to call it a jumbo loan, but loans for over 500,000, the credit score does change. So those are the quick requirements for the 3 different loan sizes. And equally as awesome as the loan is, are the uses of the loan. So a lot of the allowed expenditures on the loan were expanded. So they include operating costs, payroll, rent, inventory, commercial debt, and even some federal debt, and working capital. So a lot of leverage in how you can use this loan to get through the pandemic and get through the other side. So let's go to next slide, Danny. Okay, so one of the, what's important for processing is identify whether or not you are a new applicant. So for new applications, what you're gonna do is you're gonna go into the economic injury disaster loan and submit that new application, right? So let's just separate that in a bucket. The second group are folks that have already engaged in that application process, and they're looking to request an increase. So for those folks that maybe have a $10,000 loan and they secured that earlier during the year, there's an increase that became available. Some people missed the notification on that, but for the increases, what you're going to do is you're actually going to go into that portal where you've been operating with that loan, the electronic portal online, and you can request an increase there. That's the easiest place to request the increase. And also with some of our appeals or reconsiderations, there's also opportunities to request a reconsideration in the portal in many of the loans, not all, but many. So these are our 2 buckets: initial applications. So if you're in that initial application period, then you want to apply online. And if you've already received an application, then you're going to also visit your existing portal and request an increase if that's something that you're interested in. Now, the second thing we've got to say about this is time is coming to a close. So any actions that you're going to be taking, you need to take them quickly. And the second part of that, I would say accurately. And if there's any question on any of the applications, reach out. Right now is the important time to reach out to the SBA, reach out to the SBDC, get clarification on your next step. And we are operating as fast as possible to help all of the borrowers and new applicants to get their foot in the door. Next slide, please. Okay, so here's some timelines. Now, these timelines were set a while back, and so I'm going to reiterate what I just said. If you're looking to apply for an application, request an increase, or maybe you're in that bucket where you need some support with a reconsideration, you want to take those actions now. Some of the required documents for the application that come up, oftentimes there will be some additional documents that they may need as they go through the process. But some standard documents are your federal income tax return with all schedules. That's super important to make sure you have all of your schedules in there. They're looking at your 2019 tax return. So you want to have that ready and available. And for folks that need support on navigating the terms in the tax return, because we're not all tax experts, the Small Business Development Center and the SBA is here to help you identify what are your cost of goods sold, assuming you have an application. So also there's an IRS form. It's called a 4506T form. And that form is required on all of these applications. It's a very simple form, but you do need to make sure that you're completing the right fields in the form. And again, we are available to provide that information. And some additional documents that may be asked for are a P022 form, standard resolution, depending on your business structure, a simple form, a schedule of liabilities. Again, we're available to assist. That schedule of liabilities is based on your business. And as Danny is saying, the most important, as Danny is mentioning in the chat, programs are closing December 31st. And I'm also going to throw a caveat on that, or until the funds are exhausted in some of our programs. So be sure to not waste any time and go forward and take a look at SBA.gov and learn more about the economic injury disaster loans and some of the targeted advances that we have. So the targeted advance is a grant based on where you may reside here in San Diego or Imperial County. And details on that information are also available on SBA.gov. So that's, Danny, that's our quick 5-minute overview. And
fantastic, Jamie. I much appreciate it. And Lucy, thanks for being on. I know, Jamie, you have to get ready for a very important meeting. And so we really appreciate you getting on. I'm going to take the time, though, also to give a massive shout out to Jamie. She has done some amazing work helping literally thousands and thousands of San Diego small businesses navigate the process for the economic injury disaster loan. I know she's helped so many of our SBDC clients, and she truly is a small business hero. So thank you very much, Jamie. All right, so we're going to be able to get into our panel. And we even had one extra panelist come in. So Fernando from Primary Funding, also appreciate you getting in today. And so we certainly appreciate it. So we're excited again to be able to kind of talk about things. And we really appreciate certainly all of our sponsors as well for connecting with Capital 2021 that we've had. Some are rolling obviously into 22. So we have Home Street Bank, CDC Small Business Finance, Marble Bridge Funding, LendSpark, Primary Funding, United Midwest Savings, Pacific Premier Bank, and Banner Bank. So really appreciate all of our sponsors for our Connecting with Capital series. And so we're going to go ahead and get into things, and we're going to have you each introduce yourselves and of course your organization and kind of what the lending program is that you provide. And so why don't we go ahead and why don't we start with you, Pete, since you got some cool guitars behind you.
Thank you, appreciate it. My name's Pete Deegan. I'm with LendSpark. Our office is up in Carlsbad in the Bresci Ranch area. Simply, we help out businesses, small and medium sized, with different kinds of equipment financing needs and working capital needs in conjunction with their bank, or sometimes when their bank maybe is having some issues with them or they're tapped out, maybe the equipment's a little bit older for some reason, we'll be able to get the transaction done and work alongside a lot of the other panelists here and a lot of the other lenders. And we just, we're here to help you guys when maybe the bank can, and just be there to support you. And thanks again, SBDC, for having us.
Awesome, fantastic. Why don't we go ahead and why don't we move to you, Andrew, from Marble Bridge?
Yeah, good morning. Marble Bridge Funding Group is a commercial finance company. We've been around 24 years. I've been with the company 21 years, and I do the sales and underwriting. Can answer any questions that you may have for me. As a commercial finance company, we're doing accounts receivable finance, purchase order finance and contract finance, no minimum, and we can fund easily up to 5 million a month. And we work with startups. The companies are about 50 million a year in revenue.
Fantastic. And Roxanne, why don't you introduce yourself and your bank?
Hi, good morning. My name is Roxanne Rostamian. I'm the branch manager over at Banner Bank in Escondido. We specialize in all your business needs, anywhere from business checking with treasury management, remote deposit capture to the lending piece. We have a program called Quick Step. So we do small business from sole props to large business, major corporations. We also have underwriting that we work with very closely. So we're able to get, deals approved that maybe a larger bank that doesn't have that tight communication, may have trouble with.
Fantastic. And Fernando.
Yeah, good morning. Fernando Ponce with Primary Funding. Primary Funding is a San Diego-based alternative or community lender. We really focus on trying to help where the banks can't. So we partner with a lot of banks here in the community. We provide asset-based lending in the form of factoring, purchase order finance. We'll do some asset-based lines of credit as well if you have inventory or real estate you want to pledge as collateral. But ultimately, we just try to get creative, try to partner with you and get you the funding you need, and hopefully work with you to get you back to bankability at some point so you can go to a traditional lender. Thank you.
Awesome. Thanks, Fernando. And Joyce.
Hey everybody, good morning. My name is Joyce from Accessity, formerly Acción, and we're a mission-based lender. So our mission is to open the doors of financial opportunity to those historical with less access to capital and business, and we also support entrepreneurs of color, women, immigrant, and low moderate income entrepreneurs so they can build prosperous business and livelihoods for themselves and their families. We've been in San Diego since 1994, and we service business located in San Diego, Imperial Valley, Riverside, San Bernardino counties. And right now we're starting to expand also to the LA and Orange County areas. Thank you.
That's awesome. Thanks, Joyce. And Miss Miriam.
Hi, I'm Miriam with CDC Small Business Finance. I think the SBDC and you guys and us, we've been partnering for like 40 years. So we've been around for 40 plus years, and we are also a nonprofit alternative lender. Our goal is to be able to help small business owners that are not able to access yet capital at a traditional bank. So whether that means you're a startup business, you're an acquisition, or maybe your credit score or cash flow isn't quite what the bank is expecting, that's what we look to do to help you. So we also, in addition to our SBA programs, have some programs that specialize in helping, African-American, Hispanics, veterans, and women. So that's our focus as far as in our mission and what we're looking to do. Also, if you have employees or your business is located in a low or moderate income area, we also make exceptions for those borrowers as well. So yeah, I'm happy to help.
Awesome, fantastic. And so now I'm going to ask each of you just kind of what it takes, necessarily for a business to be able to go through kind of your lending process. What are some kind of like maybe minimum requirements you're looking at, or even kind of maybe particular industry types that work best, and maybe even industry types that maybe aren't really, the ideal fit. So why don't we go ahead and we'll start with you, Fernando.
Yeah, ideally, kind of what's going to be, we're going to have the highest success rate with is a B2B industry, right? So you have some accounts receivable, or you have POs, or something that we can leverage and really help you to speed up your cash flow process. So as far as time in business, really doesn't matter for us. I mean, if you're doing business, if you're in business and you have AR or accounts receivable invoices that you're sending out that we can leverage, that's typically going to be good enough. Now we are going to base a lot of our decision on who you're doing business with, right? So if you're doing business with very small, like mom and pop companies that we can't really find a healthy profile on DMB or anything like that, then that's going to be harder for us to approve. And then if you have some other assets like real estate or something like that you're willing to pledge, we can sometimes get creative and help you on that end as well. But ultimately, Ideally, you're going to be in a B2B industry, have some accounts receivables or some POs that we can leverage. The sweet spot for us, revenue wise, is probably, somewhere in the $250,000 to $1 million in revenue. That's really our sweet spot, but we can go a little below that, and we can definitely go above that as well.
Fantastic. And what about you, Roxanne? What is Banner Bank looking at?
So we'll really look at any industry, mainly when you're applying for a line of credit or a term loan. We want to know why. What's the purpose? What are you going to use it for? If you're a financial advisor and you want, $100,000 line of credit, we're probably going to ask, how are you going to use that? If you want a term loan for $250,000 to buy equipment, that makes perfect sense. And that's probably going to be a little bit easier to get approved. One of the good things that I find with Banner Bank is we do have a program for up to $100,000. Line of credit or term loan is we don't ask for income documentation. And we do reserve the right to request it, but up to $100,000, we're not going to ask for that income verification. As far as time in business, we look at a lot of things. What were you doing prior to this business? If you are purchasing a restaurant and it's a brand new restaurant, but you worked in restaurants for 15 years prior, we'll take that into account. So it's really the experience of the industry and not always the length of the business operation.
Fantastic. And what about you, Miriam?
So what we're looking for primarily is kind of, I guess, what's king, cash flow. So whether it's a startup business or an existing business, we're going to be looking for cash flow. So if it's a startup business, we're just looking for personal cash flow that you can pay your personal expenses. As far as in your new business, that would be projections based, of course. And what we consider a startup business could be, you haven't yet opened the doors, but you're planning on opening the doors in 2 to 3 months. You've worked with SBDC, you have your projections, your business plan, and you personally cash flow and have at least a 620 credit score, then that's a good fit for us. And then also we can consider a startup someone that's 6 months in or 8 months in or even a year or two in, depending on when you started operating and all that good stuff. As far as an existing businesses, and of course, we're looking for the business and personal cash flow. Our cash flow ratio is a 1-to-1 ratio. So it is lower than a traditional bank. So that allows us to do a lot of lending that sometimes banks cannot do. And then in addition, we do acquisitions. So if we're going to do an acquisition loan and help you purchase an existing business, whether it be a franchise like a Subway or just a mom and pop shop, then we are going to ask for the business tax returns and financials from the seller, and then your personal tax returns, of course. And I do an evaluation of the business. So we want to make sure that you're getting what you have agreed on paying, right? So that's actually pretty helpful when clients come to me and they're considering purchasing a business and they themselves are wondering is the business really worth $300,000, right? So I do help clients figure that out as well. As far as an industry, we really do accept all industries except for, marijuana, we won't have anything to do with, or the adult industry. That being said, we're still helping restaurants and gyms. Those, industries we're a little bit more careful with, of course, because of still residue from the pandemic and kind of wondering where that's going to go. So other than that, we're open to anything from construction to going online and anything of that sort. So that's a little bit about what we accept and don't accept as far as in our guidelines.
Fantastic. And Pete, what about you?
Yes, I guess since we really have two different products, I'll start with equipment first. We do have a time in business minimum of 2 years. That's what we would consider a startup. 600 credit score personally is our floor as well. But it really comes down to comparable debt history. What I mean by that, a pretty easy example is we get this trucking company, let's say guy has 2 trucks in his fleet looking to buy truck number 3, but he's only been around for 3 years and he's bought the first 2 cash. And then he hands me a quote, hey, I want $150,000. it's really hard for us to go up the ladder that quickly, especially with only 3 years of time in business. So you really have to start out with 50K loan. Had he maybe financed those first two, I would maybe be able to leverage that for 150K. Still pretty tough until, you know, we really hit that 5-year mark and plus and beyond. So with the equipment, it's really about time in business and previous borrowing history on the business. With the working capital product, we do have only a 1-year time in business requirement, and credit isn't really so much of a factor. It's a lot more revenue based, or if you're going the secured way, what the collateral is. We can get creative like some other lenders and leverage real estate. Many times what we'll do is leverage trucks or maybe heavy machinery, different collateral that we can, as long as they can still service the debt appropriately. We will definitely look at the revenues and make sure, you know, you can't borrow $1 million if you're bringing in, you know, 100,000 a month. But we definitely are willing to get creative within both spaces of equipment and working capital. Application process itself, it's free. There's no fees up front at all. It's a soft pull on personal credit, so you won't have any kind of impact. And the turnaround is pretty quick. It's usually within 24 hours, maybe on some more complicated files that are larger, might be 1 or 2 days. Sweet spot though, is about 50 to 250. We actually go application only on the equipment program. Again, pending you have good time in business, all the other factors. But we can go application only on, let's say you're buying a new excavator or something, all the way up to 350K. So yeah.
Awesome. What about you, Joyce? You're on mute.
So sorry about that.
It happens.
So like the CDC, we do startup businesses from day one, but we require them to people have a business plan and projections, and we also require them to have another source of income. So if they have a job or if they have a co-borrower, we can also use that. And for existing businesses, basically we do people with insufficient time in business, insufficient credit history. We can help them out also. High risk industries, we've been able to help out those also. And people with low credit score or past challenges, as long as they're current in all the accounts, we can help them out also. It's a great way. And also what we've done also, we do a lot of education here in Accessity. So if somebody has a lot of challenges, especially in their credit, we send them to another nonprofit and they help them get their credit cleaned up, and they afterwards they come back to us and we're able to lend them also. Also, we help on like anybody else. We do applicants with no FICO score, but we're looking, but they need to have collateral and a co-borrower. And like the CDC, we're taking a look at the whole picture. We're like, make sure that people have the capacity repayment of the loan. If we see that along, if your credit score is kind of low, we'll be able to help people with a low 600s, even some 500s. But as long as we see that you have the capacity repayment, we'll consider doing that loan. Thank you.
Awesome. And Andrew.
Yeah, good morning. So for Marble Bridge Funding Group, if we receive a full package application, we usually gather financials, tax returns. Probably 3/4 of the clients that turn into financials are not correct. We're not requiring CPA audited, but we work with them to understand. The businesses that are coming in to see us are B2B. They do business with other businesses. They do business with government, and they're growing. So you should be a growing business when you're seeking capital from Marble Bridge. Many of our clients are doubling and tripling in size potentially, and they need our solutions for cash flow. From a credit score point of view, we don't use credit score. We'll run it, but we don't use it to ultimately determine how you're doing. What we're looking for is growth. Whether you're doing small little businesses or large, we'll probably fund all of them on the receivable side. We're very liberal on that end of it. Clients that we see are companies like distributors, manufacturers, staffing companies, janitorial, nursing registry, anybody who is doing business with another business or government entity. We're doing a lot of vets as well right now. And if we had a package on Monday And we get that package after you and me have spoken, and we'll spend an hour together going over everything. Since I do the underwriting as well, I usually can determine from that conversation whether we're a fit for you or not, or if you need us and one of the other nonprofit lenders on the screen, or others I have a relationship with. Sometimes it'll be me, and I'll bring in a partner as well to get you even more money, to just coming in directly to me. But we can figure it out in an hour, and from there we'll both determine if it's the fit or not. If it is, and we have a package, we get you signed and funded within 5 days or less.
Fantastic. Thank you, Andrew. So now I kind of want to go a little bit beyond, to a couple of basic questions, because we know that, yes, the pandemic's been going on a long time. We certainly have Omicron out there, but I think, also our vaccination rates are super high here in San Diego. And so, especially as even Jamie was talking about, the SBA programs are pretty much winding down. Now, as folks are looking at their capital for 22 kind of going forward, and especially in light of some of the pandemic relief, what are some, like, a couple of things you'd really recommend to business owners or entrepreneurs as they're preparing for 22 and their capital needs? So I know it's a bit of a big question, but just kind of what are some things you'd particularly be recommending? Why don't we start with you, Roxanne?
So when you come in to speak with a banker, myself, or any lender, have your income, your tax documentations ready, and know what they mean. So if you did take losses, and it was COVID related, be able to explain that and how things are going to be different moving forward, because we can use that to communicate with the underwriters. As far as if you got PPP funding, make sure that those have been taken care of and you've applied for forgiveness. Really just understanding your own financials. I've met some business owners that have them, but they can't really tell us why things happened. And if you as the business owner don't know why, we don't know why, and we can't work with you. So I would say just being prepared. And as things are opening up, and you mentioned vaccinations, and hopefully things get back to normal. I don't even ever think it's going to be normal again, but people are going to need lines of credit. I always say it's better to have a line of credit and not need it than desperately be in a hole for too long and then try to get a line of credit after we've taken some losses. So really preparing with having that, cash flow available for things to start happening.
Fantastic. What about you, Andrew? What are some things as people are preparing for 22, what should they be thinking about?
Good question. I would say business wise, all I can say from working with all the businesses for 2021, that business is back. So we started seeing that at the beginning of the year, and it's just accelerated. I look at it in my own workflow, we've been swamped. So where 2020 was sort of slower, 2021 has really picked up steam. And my expectation for the economy is it's just going to continue to grow and grow faster in 2022 as things more normalize. In that regard, that means you got to be prepared. So a lot of the businesses, almost everyone I've seen this year has been touched by the SBA, the PPP and EIDL loans, every single one of them. And so, and going forward, the next step is how do you get more working capital? Because if you've used that money, and most of the businesses I've seen that come to us have survived because of the PPP and the EIDL loans, and now they've come to us, and now they're growing, and they need more capital. And so we can see that going forward in 2022, it's going to be a very, very strong year on the lending side. And from the banking side, I think it's a little harder for bankers, especially in the small business end, because a lot of the banks that I work with have sort of cut back in that category. They're more targeting businesses 20 million and above. A lot of the bankers are still working from home. Not every bank, some of them are back in the office part-time, but a lot are still at home. So, it's going to be, I think, still more challenging at the bank end. And as When you talk to the banks, they're going to ask about COVID and what's going on and how you survived. But you have more debt on the books if you have EIDL loans. So ratios may change. And we think it's going to be a little tougher on the finance side for small business for banks. But from the alternative lending side, which are many on this panel here, there's going to be a lot of opportunity, and all of us are going to be looking to help you to grow the business going into next year. So I would expect you should be planning for growth, maybe substantial growth. And the lenders on this panel, including myself, are ready to go to do that. And we've already been doing it, and we know how to navigate the waters with, EIDL loans and UCC filings and all the challenges that are out there. We all have that experience now, and we'll be ready for you going into 2022.
Fantastic. What about you, Pete?
Yeah, I guess going into 2022, I think most importantly, I think Roxanne touched on this as well, is make sure any of the funding that you took over these last few years is handled in the appropriate manner on the back end, whether that's applying for some sort of grant or anything like that. Because if it's not, and for some reason you've made a mistake in assumption, it could make borrowing and your borrowing potential down the road over the next couple of years a nightmare when you have some sort of issue, a lien, a judgment, God knows what. And then just to keep cash on hand for ample opportunity. I think everyone's expecting the market to grow, and I think in my kind of a department with some of the customers I'm seeing, that they'll have that ample cash on hand, and it's almost like it's burning a hole in their pocket. And they're like, oh, I'm going to pay down my truck loan or my, a piece of medical equipment we finance, whatever, that's, low, mid single digit just because they can. And I'm like, this on paper, it doesn't make sense. It's a nice taxable, it's a write-off. It's an expense for your business. It's not high rate loans. Like, this is totally different than maybe paying down some high interest debt. But if you empty your bank account, so to speak, to pay off the debt, now we're debt free, and then this big opportunity comes, and now all of a sudden I need 100,000, and now I'm in the unsecured debt market, or I'm in the, I have to put up collateral that I just paid off, and it's probably going to be a higher rate than a new purchase was that you had originally. So just be smart with the money, keep it on hand for opportunity.
Excellent point. Thanks, Pete. What about you, Joyce?
I always tell people to have a plan of attack, okay? Have a business plan, have your projections really done ahead of time. So if you're going to need capital in long term. If you need a new piece of equipment, you'll know ahead of time because you have your business and employee actions. That's why I always send them to you guys, the SBDC or the San Diego Women's Business Center, for people to have a plan of attack. That way they know how much capital they're going to need later on. Make sure they have the right accountant also to help them out with their numbers. So once they come see us, we'll have their profit and loss or their asset sheets. So we'll know how to help them out. So my thing is for everybody to plan ahead and take a look. What are your 3-term loans, 6 months and a year from now? What are your plans for your business? And take a look. That's my advice to all the businesses.
Awesome. Thanks, Joyce. What about you, Fernando?
Yeah, I'm gonna echo the sentiment of a lot of my peers here on the panel. Preparation, just having the ability to leverage capital, I think is going to be very important. One of the things that I noticed, during the initial kind of shutdown with the pandemic was our portfolio really shrunk, right? Because there was a lot of uncertainty and people stopped requesting capital. Plus there was an influx of government money that started coming in, right? So you didn't really need it. But what I did notice was, about 6 months in, the second half of that year, those who had facilities in place that were able to go back to the well once things kind of stabilized, then they realized that, hey, there's opportunities here that we can take advantage of. Those businesses really just took off. I mean, they had a head start to a lot of the other businesses that were then coming to us after the fact and saying, hey, I need to get something in place. There's opportunities that I want to capitalize on. And while they were able to eventually capitalize on those opportunities, the businesses that had those facilities in place and had those relationships in place and were able to just come to us and say, hey, here it is, let's go, just fund me right now on this. They were, it was like night and day. I mean, they had like a 90-day head start on a lot of these other businesses. So I'm not a prognosticator. I'm not going to say that that's going to be what's going to happen again, but you might as well be ready, right? Prepare for, or what is the saying? Expect the worst, prepare for the best, expect the worst, something like that. But I totally butchered that one. But you should definitely prepare and be ready so that if there is an opportunity, you can take it. And there's going to be a lender on this panel that's going to be a good fit for you. So work with the SBDC, find that lender, make sure you have that relationship in place. It may be a month from now, it may be a year from now, but when that opportunity comes, you want to be ready to pounce on it and not scramble to try to get everything ready in place to take advantage.
Roxanne got you for the saying there for Monday. She took care of it.
Yeah, let's not expect the worst. That would be awful. We'd all be in a bad mood.
But Miriam, what do you think for preparing for 22?
It's a really important time right now because a lot of people are going to be doing their taxes, and how you file your taxes as a business owner will either provide cash flow for a loan or not, right? And so I'm not a CPA. So my advice is talk to your CPA. Obviously, there's a lot of expenses that you can take as a small business owner, but I can't tell you, how many times, even today, I did a field decline, unfortunately, where a borrower tells me, oh, I make, 54,000, and then they report a negative 23,000. And so, talk to your CPA. I mean, if your plan is to apply for a loan in 2022, then let your CPA know what you're planning to do. And maybe it's not the best time to take some of that depreciation or other items that maybe you can hold off on. Like I said, I'm not a CPA, but prepare. If you want a loan or you possibly might need a loan, like now is perfect timing to have a conversation with your CPA and let your CPA know what your intentions are. If you're not anticipating needing a loan, then, talk to your CPA about that. But yeah, it's really important to do that if you feel you might need a loan, because really all lenders are, the first thing we're going to look for, no matter what capacity you do it, whether it's factoring or a traditional lender or, an impact lender like myself, we're all looking for cash flow, right? Cash flow is king. If you can't show that you can repay us with either contracts or, ARs or, bank, tax returns, then we can't lend to you, right? We can't lend to someone that can't pay us back. So no matter what our underwriting is, our system, or what we feel comfortable with, or what type of lender, we're all looking for the same thing. So have a really good conversation with your CPA and think it through before you report your taxes.
Fantastic. And so let's have a little fun. Let's talk about a success story, because I know everybody loves to talk about a successful lending or business situation and some of those situations. And so would love to kind of hear of the latest and or recent ones, or even one not so recent, but I think certainly during the pandemic a successful lending situation that you can talk about. And why don't we go ahead and start with you, Pete?
Oh, I always have some odd ones, but last week we actually just closed on a transaction is for a heating and ventilation system in a granite manufacturing facility in Vermont, because we are a national lender. And it wasn't anything crazy large. It was about 60,000, but what made this one unique is that it only had about 35K worth of actual equipment and then about 25 grand in soft cost, installation cost, etc. So most other lenders wouldn't touch that as far as financing that soft cost portion. We were actually able to pay for the entire thing, finance it on our equipment program for a 5-year term. And we were able to pay for the entire project up front to their vendor, who greatly appreciated that. So that was a pretty neat and a different situation that some other banks maybe weren't able to facilitate.
Awesome. And what about you, Fernando?
Yeah, we had an interesting one just recently, an existing client that had already been factoring with us, and we actually had a second facility that we took out with a lien on one of their commercial properties, and they came to us because they had some foreign AR. They were selling organic pesticide to a company in India, We really don't play in the foreign, AR world, but we were able to work with them, get them AR insurance, and we were actually able to factor invoices for them for a company in India, big conglomerate out of India, so they had a full robust D&B profile and everything. But that's kind of something newer that we're doing now too. We're really looking at going international if we can and if it makes sense. Obviously, it was helpful that it was an existing client and we had a relationship with them. So, building those relationships definitely helps, because if they would have come to us from the get-go with that request, we probably would not have done it, right? But we had the familiarity there, so we were able to do it.
Awesome. What about you, Roxanne?
So off the fly, so we had a client that had their checking account with us, and they were looking to purchase a commercial property. They were primarily internet, selling merchandise off the internet. So this was going to be their first storefront. So we were able to get them their first storefront locally, and now they're looking for their second warehouse. So they'd never been operating out of having the merchandise out. So it was really cool to be able to take them off of the internet and put them actually where people can walk in. And it's in Oceanside, so it's a great location right there on the 101. It's always neat to see people do local business, and become like a little part of the community. So.
Awesome. And what about you, Andrew?
So for 2021, we had a staffing company in an industry I'm very familiar with, and I've funded numerous companies in the same industry for years. They were SBDC referral to us. They had received some startup capital of about 150,000. And because they were growing so fast, they blew through all the funds, and then they couldn't grow anymore. Because there was just a term loan as opposed to receivable finance, and the receivables were growing quite rapidly, but also taking a long time to turn, up to 90 days. And so we got in there with them, and we started funding them. And this year already, we've probably have funded over $1.3 million. So they almost tripled this year. And we also helped them with the collections, because they put most of their eggs in one basket in a very large company who was paying them extremely slow. We helped with the collections, but we also go beyond that to talk about things strategically and how they should run their business, and saying, you shouldn't have all your eggs in one basket. And when you leave us and you do go to the bank, and that will probably happen next year, the bank's going to expect them to have 5 or 10 clients, not just one large client, where all the risks are. So we give a lot of consulting in addition to that, and they've started acting on that, and they've started bringing on a lot of new clients and doing less business with the one that's dragging it out for them. And from that level, we expect them probably to double again next year and really be on their way. So that's sort of the impact that we have. But we're not just a lender. We're here to play more of a consulting type role as well, and help them get set up. Talked about their financials, which were not correct as well, and they're cleaning those up as well. So if everything goes right, by the end of next year, to double their business, they should be bankable at that time because of the profits and everything. And they'll be able to show a good presentation to the lender when they're ready to go.
Fantastic. And what about you, Miriam? I know you always got some good stories.
Yeah, so I have a client that was starting his business through crowdfunding, and he got, I think, about 200,000. And so that really helped him, complete the production and the research and development of his product. So when he came to us, he had his product ready, but now he needed to be able to fulfill all those orders, right? And he has quite a bit of orders, and he does a really awesome, so is it called TikTok? I'm not super up on, I think it's called TikTok. So yeah, so that it's really popular, and they have like the green screen option in the back where they can, I don't know, create things, or there's a lot of different things you could do with the green screen. But anyways, he produced a mini version of that for an iPhone, which is super cool. So he has a ton of orders and no kind of way to fulfill the orders. So we were able to give him $250,000, which is our max loan amount, for a really good interest rate, 6.5, 10-year term, no prepayment penalties. So he is just like as happy as can be. And I just know he's going to be super successful. So yeah, this new things happening with our, with COVID, kind of a lot of businesses turning to be online, and that, growing industry growing and more, I think anything having to do with sales online. So yeah, we was able to help him, and he's super happy, and I'm glad we were able to do that because he had heard quite a bit of no's from some other lenders. So I was happy that we were able to do something for him.
Fantastic. And what about you, Joyce? Sure, you got some great stories.
Well, I have one that we were able to help somebody out immediately. This guy had just opened a pizzeria in Spring Valley, and he needed $5,000 because the health department came in and he needed to fix a couple of things. So we were able to do this loan in less than 4 working days. He provided all the information. It was really fast, and he was able to make the repairs already starting this week. So we were happy to be able to help him out so he can reopen his business. So that was quite an amazing thing.
Nice.
Yeah, that is awesome. That is so awesome. I know all of you have done huge amounts of work. I mean, you, the 6 of you, the SBA from before, our entire SBDC staff, and all of the lenders, the lending community. I've seen, in the last 2 years with the pandemic, just a huge support for small business and a rallying, knowing the impacts that it's had. And now as we're rolling into the end of 21, we hope all the best for 2022. I know from the SBDC side, we're excited. We have a lot of great and exciting programs coming up. Including, we're rolling out next week our new partnership with Intuit. So that way, all of you working on your accounting fixes and all of that, some great training programs on improving your books. We'll have some other financial service ones, financial fitness programs for next year, and many other great ones. So again, I want to appreciate all of our sponsors that have been for 2021 again, which is Home Street Bank, CDC Small Business Finance, Marble Bridge Funding, LendSpark, Primary Funding, United Midwest Bank, Pacific Premier Bank, and Banner Bank. Great support, and we appreciate everybody. And thank you all. Have a happy holidays. Have a happy new year. Please spend time with your loved ones and certainly enjoy this time of the year. Thank you.